Narendra Taneja also joining us on the phone line. Mr. Taneja, it's all about crude today. It's really that energy shock that's hitting the Lal Street with oil nearly $120 on supply fears, and we're seeing equity markets tumble. What is your perspective? We've last seen these prices maybe 45 months ago, and that situation was also different. How do you see this panning out? Because markets are getting incredibly nervous of the impact on economic growth.
Well, if you look at the markets last 7 days, I think the markets were, shown tremendous maturity in a day, and they were very restrained, hoping that there would be some kind of light at the end of the tunnel and a Strait of Hormuz. Probably as Americans have been saying that, they would open the channel, at least the passage, so that the tankers, traffic could start. But that they couldn't manage that. They couldn't deliver on that. So markets are extremely anxious. Two reasons. Number one is that supply probably Saudi Arabia and Kuwait and Iraq, they may want to, but probably they won't be able to put their oil on the market between the massive supply disruption, which is already happening, but market is now beginning to conclude that probably is going to be long time to come. Secondly, markets think that, war is going to escalate in the sense countries like United Arab Emirates and Bahrain and maybe even Saudi Arabia, that they are forced to jump into the war against Iran. If that happens, we are talking about massive escalation. And oil market, they are very used to these, these kind of war situation volatility, but this time is a little bit too much. And that's why you see the prices are where they are. And if it continues in UAE, etc., they also join the war, then we are talking of a scenario where oil prices may actually reach $150 per barrel on supply disruption and also because, of anxieties and other things. So my own sense is situation is beginning to get very, very tense.
Mr. Taneja, as you said, it's starting to get tense. And let's just look at the options for India in particular. Supply constraints there. They have said that they've got reserves, and we're looking at supplies from Russia. In fact, the government saying no one can tell us where to actually source it from, and if they need to get it from Russia, they will. But it's not just the question now of making sure that crude is available. It's actually what's happening on the price front that's making everyone nervous. So how much further do you anticipate that we could possibly see this go over the next couple of weeks? I mean, assuming that this is going to continue, given that the Qatar minister quoted $150 on Friday.
You see, look at this. Prices, of course, is a big worry for economies like us since we import, 89% of total requirement of oil. Even if you get from Russia, you won't really be able to increase the supply overnight. For any ship to travel from Russia to India takes 26 days. So our biggest worry right now is, of course, the price, and the second is, of course, disruption. If Saudi oil, Kuwaiti oil, Iraqi oil, Abu Dhabi oil actually goes out of the global supply system, then the supply disruption is going to be a big, big worry for us, particularly because our dependence, when you look at the large economies, our dependence on imports is much higher than China or any other country. If Japan is a developed country, their dependence is 90%. That's a different story. And also reserves. Our reserves are rather limited, 25 in strategic petroleum reserves and 25 days, in other places, including the tank farms and et cetera, et cetera. So let's say we are talking of reserves for 40 days, but then reserves means reserves. You can't really bottom up your reserves, and just consume everything. You will have to keep it given this kind of situation we are getting into. So let's say we have got oil available, let's say, for next 30 days, but then we have to continue to import Russia or from wherever. But if Saudi oil is out of circulation, big chunk of it, and Iraqi out of it, Kuwaiti out of it, Abu Dhabi out of it, then the point is that the world is going to face massive supply disruption. And where is that oil is going to come from? So that's, I think, on the one hand price and at the same time supply disruption. So I think we need to work on kind of at a war scale today to make sure that supply is available to economies like India.
So that's just it, isn't it, Mr. Taneja? We've already got the opposition standing out and saying that we should be hearing more from the government on how they intend to tackle this. Till now, we've not heard any kind of commentary coming in on this front, outside of the fact that there's a sourcing from Russia. What more are you going to be looking out for in terms of commentary, whether it be from the political regulators or whether it even be from on the back of monetary policy? The rupee is also tumbling today. What kind of reassurance do you think markets will be looking for?
I think, two things. First of all, America should make an announcement that they're going to release oil from their strategic reserves. They've got massive reserves. And Japan. Japan has got huge reserves, so Japan should also come out hopefully as soon as possible. There are reports they might come out actually today. They're going to release oil from the reserve. If America and Japan, they take the initiatives, that will really reassure the markets at least for 2 or 3 days to come. And if China also joins us because they've got massive reserves, then that will help the situation. But need to wait. There is no other option at the moment when we're talking of the next 24 hours. And the kind of, assurance that the markets need is that these 3 countries, they release oil from their strategic reserves so that markets begin to cool down a bit.
Mr. Taneja, interestingly, of course, we know that there are some other Asian economies that will also be severely hit, Japan, Korea, and we're seeing that bloodbath on the screens this morning. From a global perspective as well, how deep could this pain be, and how much would that then impact us, again, from more of a monetary and economic growth standpoint as well?
You see, when you look at the economies, like let's say focus on Asia, Japan has got oil for, let's say, 4 months. So I think they don't need to worry too much as far as the supply is concerned. Of course, price is going to be worried. But China has got oil for roughly 5 months because they have been hoarding oil or, storing oil, 1 million barrels of oil every day the last 1 year. So they've got plenty of oil reserves, both commercial as well as strategic reserves. So they are in a comfortable position. But when you look at the large consumers, I think we are the one probably more vulnerable than any other large economy in Asia Pacific region. So therefore, I think we need to kind of have a communication with a country like the United States and others so that, to secure supply of oil. Price is, of course, a worry, but that's not in our hand, but at the same time, securing oil from friendly countries so that they release from the reserves or wherever, and we can bring it to India. Right now, no big worry. I think for 40 days, we don't need to worry. But I'm thinking that if war escalates, and in that case, we need to start preparing for the supply side also from now. Because if other countries also get involved in the region, Persian Gulf region, then the challenge is going to be even bigger. Right now, situation is a bit out of control and prices are rocketing up.
Got it. Mr. Taneja, what is different this time around? You have been, observing the energy markets for decades. You have experience in seeing all the kind of twists and tumbles over the years. We haven't seen this kind of an oil shock in a long time. What is different this time around?
Well, good question. I think the Strait of Hormuz, which is the biggest choke point for the global economy, not only oil, the global economy, the Strait of Hormuz never, ever been closed. Today, for all practical purposes, you can argue that it's not really closed, but it is as good as closed. The Strait of Hormuz has never been closed. So this is a big, change. That for the first time in history, the Strait of Hormuz is as good as closed. And that despite the assurances and efforts by the United States Navy and so on and so forth, they haven't really managed to open it. That's number one. Number two, we have seen that before that, big economies like America, they've been very careful managing the price in terms of releasing reserves or putting pressure on market or playing whatever the game they're very good at playing in terms of how to control the oil price. This time, they seems to be insensitive to it. America is the biggest consumer of oil, biggest producer of oil, and the economy is very sensitive to the price of oil. But this time it looks politics has become more important than the price of oil. And so therefore, I think America needs to kind of do something, stop the war, intervene and all that. Otherwise, I think so this is a big change that never seen America being so insensitive to the price of oil. It's the first time we have experienced that kind of thing. The prices are where they are rocketing up. They are almost touching $120 per barrel, and Americans are not doing anything, neither in terms of strategic reserves nor actually at least reassuring the market. A little assurance from the American president is going to help the situation. If the statements are like, we don't care, we will teach Iran a lesson, that kind of statement is not. Oil markets don't like that. Oil markets the last 7-8 days shown tremendous. I've never seen oil markets showing this kind of maturity and resilience and all that. But now I think they think enough is enough. So they've given up, and now they're going where they should be.
All right, Mr. Taneja, thank you so much for joining us this morning. Great speaking with you and understanding the complexity of the situation.
If you like the video, do like, comment, share and subscribe.